Robert Reffkin, co-founder and CEO of Compass, joins us now to discuss it all. Robert, good to see you.
Thank you. Glad to be here.
Is there a magic mortgage rate threshold you're waiting for to catalyze this market a little bit, free up some supply and all the rest?
Yeah, I think 6.5% I'd feel good about. I think we'd be in 4.67, 8 million seasonally adjusted annual rate of home sales. But the magic number is 5.9999.
Okay.
That'd be marketing magic.
Yeah.
And it would tell the world that mortgage rates are at a level where they should go and grab a property.
So that's more than 3/4 of a percentage point below where we are right now.
Yeah.
Gotcha.
But last week we did have 3 days below 7.
Yeah.
Not that I look every single day, multiple times a day.
Yeah.
But I think around 7%, we are going to continue to be at low 4 million seasonally adjusted annual rate of home sales.
And I guess this question of supply, I mean, you have the new home sales building permits missing on the downside yesterday, and it feels as if, higher rates to restrain inflation is keeping us from creating supply, which could restrain inflation.
Yeah, it's a very tricky issue. We have overall, there's affordability. The real news of today is that prices last month were the highest in recorded history.
Yeah.
And the reason they're the highest is because there's not enough supply, as you mentioned. And so to help with supply, we need policies that encourage more development and more permits. It would be great if we could figure out how to make mortgages assumable so people feel like they won't lose their financial asset, that low mortgage rate, if they sell their home. And we could also benefit from 1, 2, 3, 4, 5, 6 rate cuts to help bring mortgage rates down.
I'm wondering, and I know the New York market is very different from many other markets in the country. Maybe it's completely unique. But it does seem like prices are really coming down quick. I've noticed a lot of price cuts in the market. And I'm wondering if that's what you're seeing and if sellers are really reflecting the idea that perhaps in New York there might be inventory that people don't necessarily want, and they have to adjust their prices to reflect the mortgage reality.
It is somewhat of a confusing market because there are mixed signals. On one hand, you have prices at the highest in recorded history. But on the other hand, you have more homes today on the market with price drops than any time in the last 10 years, which reflects that buyers are pushing back. Right now, it's 36.1% of all homes on the market have had a price drop. That's 16% more than it was this time last year. This time last year was 31.4, so 16% higher, 36.4. So we are seeing these somewhat confusing signals. That said, I would expect prices to be relatively flat. On a month-over-month basis, they have been flat. It's the year-over-year where the prices are up.
You know, the town that gets a lot of attention on the inventory side is Austin. And I wonder what you think about areas that had such explosive growth. Did they get over their skis in the way of supply?
Well, there's no doubt about it. Austin last year had the negative impact of, as you say, getting over its skis, being somewhat overbuilt, and a lot of influx of people from across the country, particularly California, moving to Austin. But they took the pain last year, and the pain isn't there as much anymore. Last year, prices were down very meaningfully, as well as transactions, but we've seen a pretty significant recovery relative to last year so far this year.
When you think about MSAs that will be an echo of that this year, what comes to mind?
I think Florida.
Really?
Florida.
You mentioned Jacksonville, we put on the screen.
We're seeing more inventory being built up in Florida than any other market, and we're seeing more price drops in Florida than any other market. And so I think that's the market that may deal with the pain.
Is it predominantly single family or multi as well?
Single family, condos, both.
Yeah, gotcha. Robert, appreciate the time today.
Glad to be
Thanks a lot
here.
for coming by.